Hello and welcome to this brand new episode of Smart Money. Today on the show, we're going to discuss a topic that has been gaining currency globally, and it's called impact investing. Now, impact investing are investments that are made for generating a positive and measurable impact that considers social and environmental elements and not only financial return. We have with us today industry veteran Vallabh Bhansali, the founder of the ENAM Group. He is also on the governing body of Flame University, which is a pioneer of liberal education in India, a multidisciplinary approach to education. Mr. Bhansali, thank you so much for stopping by here.
Thank you for having me here.
And thank you for being with us in the studio. You know, this is a special topic because we don't really talk so much about finance and marrying it with a social cause. So tell us a little bit about impact investing and where is India? I know globally it is gaining currency, but where is India in terms of, picking up as far as impact investing is concerned?
So let me give you an example to make it very simple. Most of your audience would have heard about Grameen Bank, which is a bank in Bangladesh, and they started giving loans to, women, and it was game-changing. They made an impact on their lives, on the community, and so on, and became larger and larger, and inspired so many countries too. So that's impact for you. Another example I can give you is Amul. So Amul is a commercial entity, but they worked with a set of community problems and converted that into a huge advantage and became the largest dairy or one of the largest dairies in the world. So that's impact for you. So you defined very correctly that impact is with an intent, measurable, and a positive change. And this has been with the Sustainability Development Goals of the United States in the last 15, 20 years, this is gaining ground. So what is called ESG, which is environment, society, and governance, those issues are becoming very important. And the good news is that while in India it is small, it's growing very fast. It is expected that, it is estimated that the world impact funds under management are probably growing at 16, 17%. Whereas in India, probably they're growing at 25%. So in the last few years, it's catching up very fast. Number of people, number of fund houses are starting ESG funds and ESG possibilities. So we are growing. And India has been a late starter in many things, but it catches up fast. I think it'll catch up fast on impact also.
And I do know that, in this whole sort of ultra HNI category, right? We are seeing, I think the number of ultra HNIs are growing by the day, especially in a market like India. So when I speak to a lot of private wealth managers, I understand that a lot of these people want to now put their money, channelize their money into the right cause, into a social cause as well. So can you tell us what are the different categories of sustainable investment? And for a viewer, watching us right now, how do you sort of start this journey?
So one easy way is to look at what we call negative evaluation. That means your fund manager will not invest in a set of companies. For example, at ENAM, right from beginning, we said we will not deal with companies that are in liquor, in gambling, in killing of animals, anything social, anti-sociality, for example. This is a negative screening. And so there are a lot of growing number of funds who are doing ESG screening. So that's an easy way, and that's you make a beginning. The second is more positive impact. So, if you say investing in healthcare, in education, in microfinance, these are all areas where you have measurable impact. So, for example, healthcare can be a luxury hospital, or it can be primary healthcare. Now, primary healthcare at a certain cost, delivered with technology, and you add layers, that's where the second part of impact investing comes. So, to make it simpler, so there are impact investing is about three things. So firstly, you have an intention of directing your money in a certain manner. Then you have a device. How will you do it? And third is the measurement. All three have challenges, and maybe we can talk about it. But so as more devices come, technology is enabling those devices. So a lot of things are happening in the agri field, for example. That if you give better seeds to farmer, and not only seeds, but can you train him, etc., then the economy or the finances of the farmer change dramatically. And number of companies are coming up in agri to make this kind of impact.
I was reading, in fact, in one of the documents that, a lot of the sovereign wealth funds, the Islamic-based sovereign wealth funds are channelizing a lot of their money into spaces like renewable energy, oil and gas. So I want to talk a little bit about that. But just to understand, what's the current market size of impact investing and what is the kind of potential, not just in India, but globally as well?
So if you look at the kind of impact we need to make, the size is probably infinite. But if you look at what sort of money has gone into it, so one estimate is that roughly $130 trillion is the total assets under management, of which only 0.5 to 2% probably has gone into what can be called impact investing.
Globally?
Globally.
Okay.
Which is so, somewhere number between 1.15 to 1.2 is some better math, but maybe others have not been computed. It's not easy to compute. So that's the size of the opportunity. If you look at SDGs, so wherever devices will come up, that means this is the way to bring about an impact, this is measurable, and there's a good fund manager, I think this will grow exponentially. As our deadlines for 2030, 2050 come closer, this is going to grow. In India, it is estimated about $25 billion.
Wow. And what is it currently at?
So this is currently $25 billion. Okay. This could grow, I said it is growing much faster. This is growing about 25%, but nothing prevents this could grow at 100% per annum. So it depends upon fund managers coming up with devices or businessmen, entrepreneurs coming up with devices. This is how I will deliver healthcare, for example. This is how I'll deliver education. So if I can deliver high-class education through using technology, my cost of delivery can be much lower and I can go to, so it depends. I need to bring such devices and such platforms. Happy news is that most people are not aware of the kind of enterprise that is mushrooming in India, tackling these very problems.
So, of course, we spoke about the importance of impact investing, but I do want to understand from a retail investor standpoint, right? Suppose I want to sort of do my bit for this kind of a social cause. Are there funds in India that already do impact investing? I know that there are ESG funds, but do you think there's more that needs to be done from a mutual fund standpoint in order to sort of empower people to invest for a social cause?
So it's difficult because our savings and savers are becoming investors rather more recently, and therefore they're still looking for a certain return. But the good news is globally, impact investing has been very profitable. And they have produced, something like 17 to 18% return. Wow. And some funds have got much, much greater return. The fund management fees also in impact funds is generally higher than what an average fund manager will get, because he says, I'm applying my mind differently and bringing about an impact. So I think we are just starting late to the party, as I said, but this will grow. So today's option for retail investors may be really to invest in the ESG fund, which every fund house is now, growing. I expect that they should market them more aggressively, and maybe the fund house should show, put their skin in the game by saying that, okay, we'll charge less fund management fees in this, etc., to attract the retail investors so that they also will be ready to accept slightly lower return in case that is necessary. For us, we don't expect return from our impact investments, for example.
No returns at all? You all don't look for any return?
So, see, there's something called surplus, and there's something called return. Unless you create an organization that will create surplus and become self-sustainable, so it has to be efficient, it has to be smart, etc., etc. But that is not to say that we want to take away the profits. Profitability as a measure of efficiency is something that we want to see in the companies or investments, but to take that for ourselves, that's not the idea.
Okay.
So similarly, the investor can be, encouraged that, okay, we are also not taking a profit, but let's go and make an impact on the society.
Okay, you gave us some really good examples about what impact investing entails, right? Whether something like a Grameen Bank or something like an Amul, or the fact that you don't invest in, say, a tobacco company or an alcohol company. But things are changing by the day. So what are the big trends that are evolving in this impact market?
So one very big trend has been green bonds. So, all the ESG companies, debt markets are very large, and then it is very easy for people to invest in green bonds. So that's one of the biggest trends. So the second big trend, as I said, in this negative screening, that's growing very rapidly. Some of the big fund houses like BlackRock and all, they're very sensitive about ESG and rejecting companies on that basis. So this is a very big trend, the negative. And I think the positive trend is a challenge because, you need the right, intervention to make an impact. That's positive impact. That's not always easy. You mentioned about Islamic funds. Now, Islamic funds, they are very broadly defined, and they follow Sharia guidelines rather than impact guidelines. So that number is probably the largest amongst religion-led investment. They're probably $3 trillion or something like that. But that's we call religion-led,
faith-based investing.
Faith-based investing.
I wanted to talk a little about that as well. I mean, $3 trillion is a large amount, right? And I'm sure it's not just in Islamic funds, but there are several other funds. I was reading about Catholic-based funds as well. You guys do a lot in terms of religion-based investing too. What is the kind of potential there, and what do you see as the future of faith-based investing?
So I think when the areas are well defined, for example, we found Flame University. We thought for Jains, giving back is very important, and giving back by way of knowledge is the best thing that you can do. And therefore, we thought this was fantastic. And then we identified the next level of challenge that, okay, India doesn't have good liberal arts colleges. Most of the students are going abroad. And we also thought that, the country could do with more leaders. And the leaders are ones they have more broad mind, they can connect more dots, and so they're not from a narrow field. So we said, okay, let's create a fantastic program on that. And I think over the last 15 years, we think we have done a decent job. And the other point was that in the first decade, we saw that the number of students going abroad was rising very fast. It depletes our foreign exchange. So we thought if we can build an institution where we'll attract at least some of those students, that'll be good for the country. And India could be spending something like $60 billion in the next 2 years, every year, very soon, because that's the kind of, up to 2 million students maybe going out in the next 2-3 years. So I think, so we had those parameters, and so we found it easy to. So similarly, people find investing in healthcare pretty attractive. Okay. So those are the two big areas. Microfinance has been something, very, very popular amongst the institutional investors to come in, and India has a huge potential to invest in that.
Okay, we have to take a short break. Very interesting conversation, but just going to take a quick commercial break. Don't go anywhere. We'll come back in just a bit and talk about the nuances of impact-based investing. Do stay tuned in. Well, thank you for staying with us on Smart Money. We still have with us industry veteran Vallabh Bhansali, and we are talking about impact investing, where you invest for a social cause, for a greater good, but there are also financial returns involved. So, Mr. Bhansali, before the break, we were talking about the pros and cons of investing, of doing impact investing, right? But there are some barriers and some challenges in making these impact investments because A, the track record is not that great, perhaps. As you said, globally, the returns have been much better. And B, there's not so much knowledge about what the taxation is that's involved. If someone wants to put money for a greater good, you might as well just put it in a charity. I mean, at least that's the thought that's doing the rounds. Your thoughts here?
So charity, of course, is very good, and it's the largest probably part of the impact investing or impact outflow. But we should not feel discouraged. I'll give you, reflecting on life, reflecting on our history. Mutual funds started in 1988. They did not take off until 2002, 2003, 2004. And then they haven't looked back. So things take time. This is more sophisticated investing where, you don't find that many entrepreneurs doing it. So I feel that's why the trend has already started to change, that it's growing faster. So I think this will grow in India. So the real barrier is not only measurement of impact, because sometimes it takes much longer. That's the biggest challenge in this. But the second also is that, it takes time to find those methodologies where you can combine financial return and impact. And as I told you that I've seen a number of companies in dairy, in agri, where this has started to happen big time.
Okay, that's great. Are there enough opportunities available in the market for impact investment? And if you can just, make it a little easier for our viewers to understand where are these opportunities?
So for those who want to invest with private investors, private equity funds, there are a number of private equity funds in India. There is Avishka, there is Omedia, there is Responsibility, there's Aspada. So there are, new ones coming all the time. And so you make some effort, you will be able to put some money with them.
Okay. And what is the primary driver in terms of your own interest in impact investing? I mean, how do you see it fitting into a larger portfolio of, say, traditional investments and charitable activity?
It may not be obvious to others, but to me it is very obvious that if you are, the arch capitalism lies in investing in impact. And how? For capitalism to thrive, you need large number of resources, you need managers, you need consumers, and where will you get all of them unless they are sustainable? And you need to protect Mother Earth, the ultimate resource for everything. So unless this creative destruction happens all the time, capitalism doesn't thrive. And for that to happen, you need new players, new managers, new entrepreneurs, et cetera, et cetera. So you want to bring up all the communities, whether as consumer or as supplier. India has become the greatest supplier of, for example, knowledge and managers today. India was thought of as a consumer. But so when you do impact investing and you bring up all communities, you don't know how you will benefit. So if you're a true capitalist, this is what you will want to do. This is what we teach our children, that you're not doing anybody a favor. Of course, then there's a humanitarian side that, for us, for example, we set ourselves goals. My father taught a principle that, whatever capital I gave you, you earn that much and give my capital away. It's a big lighthouse for us. So we hope that we can do that. So I think it's a utterly selfish thing to participate in impact investing.
Okay, that's a new one, and these pearls of wisdom are really important, especially for our next generation, right? Because climate change is real, as we know. Natural disasters are just increasing. We've seen it recently. So I think at a time like this, investing for a greater cause, for social good is extremely important, especially on the ESG front. So for the next generation, how are you targeting them? What are you aiming to do? I know that you all are doing a lot at Flame University as well in terms of education, in terms of liberal arts, but what else?
So I think, we have a very active investment program at Flame, and probably we are one of the best in Asia. We get people from all around the world to participate in our investment-related programs. But there again, we are trying to teach them this capitalist principle, learning how to live life. So I'm involved in a variety of things, from where we are making people sensitive about the next challenges, whether it is ESG, whether it is their own personal well-being. So we hope to start a big center of well-being at Flame, that people, you don't understand, well-being means good government, well-being means good environment, good well-being means good personal life, and so on and so forth. So at Flame, we're thinking a lot about these things and creating centers.
Okay, that's great to know. Just one last question before I let you go. ESG investing as a concept in India has perhaps picked up, I think, just a few years ago. Do you see a lot of opportunities here within Indian mutual funds? And if yes, anything that you'd want to leave us with? Where do you see the big, investment opportunity?
So I think in education, in healthcare, in finance, and in energy, and in agri and forestry. These are all areas where India has tremendous potential. We have ancient wisdom. We have a variety of, ecologies in the country. Very few countries have this broad, widespread ecology of different cultures, different crop possibilities, different consumption patterns, etc. And the scope to penetrate all these markets deeply for the next 5, 10, 15, 20 years. So I think as young entrepreneurs will come and identify these things, Indian investors will have many, many opportunities. Think of the next Amul, for example.
Okay, well, on that note, thank you so much, Mr. Bhansali. It was really a pleasure speaking to you. We talk generally about the markets, about the here and the now, but this is a larger topic, and I hope that, such conversations continue, they gain currency so that people are more aware. That's what our show is about, to make investors aware of new themes of investment. Thank you so much for being with us.
I hope so too. Thank you for having me here.
All right, folks, with that, it's a wrap on this edition of Smart Money. Thanks a lot for watching.